Hey everyone, welcome back to Corporate Decoder. Today FRAF just filed an 8K and I am seeing something interesting about their dividend. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is telling us about their latest dividend decision, and it shows a steady hand at the helm. So what exactly happened here? Franklin Financial Services Corporation, a company that provides financial services, has filed what is called a Form 8. Think of this as a quick update report that companies have to file when something important happens that investors should know about right away. This particular filing is about other events, which means something noteworthy occurred that isn't covered in other specific reporting forms. Now let's get to the really interesting part. This filing tells us that on the 16th of July 2026, the board of directors decided to declare a regular cash dividend. This is like the company saying, we're sharing some of our profits with our shareholders. The amount they decided on is 34 cents. Per S.R.A.F for the third quarter of 2026. What is cool about this is how they are comparing it to previous periods. They are saying this 34-cent dividend is the same as what they paid in the second quarter of 2026. But importantly, it is a little bit higher than the 33 cents they paid out in the third quarter of last year, 2025. That small increase, about 3%, shows that the company is growing its ability to return cash to its owners. This kind of steady, if not accelerating, dividend payment is often a sign of a stable and well-managed company. They also tell us exactly when you'll get the money. If you own the stock on the 7th of August, you will receive the dividend payment on the 26th of August. This clarity in payment dates is good for investors who rely on these payments for income. Now, a little bit about the company's stock itself. Franklin Financial Services Corporation's common stock trades on the Nasdaq Capital Market Exchange under the ticker symbol F.R.A.F. As of the latest information we have from the context, the company has a market capitalization of about $281 million and a price to earnings ratio of around 11.7. The current price is about $62.58 and it has traded in a range between $38.52 and $64.88 over the past year. This shows it is a mid-sized company in the financial services sector. The specific security being discussed in relation to this dividend is their common stock. This is the basic ownership unit of the company. When a company declares a dividend, it is typically paid out to holders of its common stock. This section deals with exhibits filed with the report. These are additional documents that provide more detail. The main exhibit listed here is the cover page of this very report, formatted in something called inline XBRL. XBRL is a type of digital language designed to make it easier for computers to read and analyze financial information. Inline XBRL means the XBRL data is embedded directly within the HTML document, making it more accessible. This is a technical detail that helps regulators and analysts process the data efficiently. Finally, we have the signatures. This is where the company officially confirms the information in the report. The signature here is from Charles B. Searle, Jr., who is the president of Franklin Financial Services Corporation. By signing, he is attesting that the information provided is accurate to the best of his knowledge. The date of the signature is the 17th of July 2026, which is the day the report was filed. Looking at this filing, Franklin Financial Services Corporation is showing a consistent approach to returning value to shareholders. The steady dividend payout with a modest increase year over year suggests financial stability and a management team that is confident in the company's ongoing performance. In a market that can be volatile, this kind of predictability in dividends is a welcome sign for income-focused investors. The company isn't making any drastic changes, which can be a positive in the often conservative banking sector. The risk I am watching is if this stability allows competitors to gain ground in innovation or market share. What I am actually looking for is continued revenue growth to support these dividend increases over the long term. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you enjoyed this deep dive, hit like, subscribe, and join our Discord community, all linked below.